Look at this disclosure, read it back and forth, upside and downside. This way we could start the midday call. All right, guys, my name is Scott Rutherford, Chief Strategic Officer of T3Live.com. Welcome to today's midday little catch-up, midday little call, little education, little everything. Every day I come in the morning after writing my note, I do a morning call, which is typically my plan or my game plan for the day, where I come up with lots of different active strategies with 15 to 20 names, and then obviously trade the open. And some things happen, some things trigger, some things don't, and some things we just continue the trade. And then I do a recap every day after 4 o'clock. For those of you on Ruther All Access, you know this. For those of you who are seeing this for the first time, like, hey, I used to see a video like this. Well, I used to do it in the public Twitter sphere every before and after, but the forces at will said it's behind the paywall. But anyway, this midday call, I feel like it's been a lot of fun. A lot of people appreciate it. And as long as you guys watch and appreciate it, I'll do it. And I'm going to go over a few things because it is earnings season and there's a lot to do. Lots of ways to lose a lot of money, lots of ways to make calculated money, lots of ways to trade names after the report once the binary event is out of the way. So let's just get to it. This is the chart of the S&P Cash. I want to give you a little lesson about, portfolio approach and tactical approach, because, when the volatility is high and there's a lot of unknowns out there, I'm usually tactical. Meaning I have, very small amount of positions. I'm looking for longs. I'm looking for shorts. Being very quick with my trades. And then when the market is trending and above the 8 and 21-day moving average, which I talk about a lot, and I go over it a lot on my webinars, I try and be in a portfolio approach, meaning I try and hold 4, 8, 12, 15 longs, massage them using chart patterns and pivots, and let the market make me some money, as well as actively day trading areas of charts to make it additional cash flow. So if you look here at the chart of the S&P Cash, people are like, when did you go back into portfolio approach and why? Right here. Okay, this was the spot. Okay, 29.62. This was the gap up that wound up holding. So right on this inside day, holding this gap was when some names started really reacting well, including Apple and some others. And that's when I kind of got into my, let's hold some positions and let it work. Some guys cheated when it took out 29.29. Remember how tight this was? But really, this gap up and held is when we got above all the moving averages. Remember this? We were below it, and then extended all the way down before this red dog reversal here. Well, anyway, this was the spot. So you could have been a buyer versus 29.60, and then here we were today as high as what was that, 30.44. So you're talking about 70 to 80 handles of movement where you could have been really massaging positions, and we've been above the 8-day pretty much this entire time. So if you would have sold strength every time we got a little extended, you were able to buy a dip. Sell some strength, red dog reversal, buy a dip into the 8-day. Here inside day, take this out, and then all of a sudden we're a little extended, you sell some. So you can manage your trade, but the condition of the market was actively bullish versus, this time, but, it was pretty much hovering below, which was actively bearish. So this was an actively bearish sequence, and this starting here was actively bullish. Does it take us to 3,100, 3,120? Who knows? All I know is we're going to continue to stay with this trend until it changes. Okay, we've had lots of stocks and lots of different types of tactics to use. The Qs. Also, remember this gap up that held, okay? This was 190.65, came in, was extended, held it again. Right here on this little, red dog reversal when it went below 191.79 and reclaimed it, that was, your invitation or your clue to get back long. And now all of a sudden, here we are, at highs, which 1, 2, 3, 4 days into this day, you probably want to trim versus add. But anyway, very nice play. In this gap up, let the 8-day, this was one little tiny spot where it got a little tricky. If you use the 21-day, which some people use if they're not as active, it never even touched it. So that's a strong trend. That's a trend to be long, not short, or not looking to be short. IWM, playing a little bit of catch up. Took out 155.53. Looks like it's off the highs here. Ultimately, this channel that we've been in for a year. When it looks bad, you've had to buy it. When it looks good, you had to sell it. That's not the way I love to trade. But anyway, ever since taking out 148.50, it's been above the moving averages, grinding higher, and just got a little stretched here. But ultimately, when the small caps aren't a headwind, which they haven't been for the past 2 weeks, the market tends to lift a little bit easier. So like I said before, in portfolio approach, what do? Do you have to have every stock that's looking to break out above all-time highs to hold, or could you take some names that are acting better that you can massage positions around, and then also focus on trading names that trade with patterns and move fast? That's what I like to do. So if you remember 2 weeks ago, after JP Morgan reported, it took out its 2-year high. I'm like, I think we could just sit in Bank of America and buy some dips and sell some strength, and it could get back to 32 or 33. And I posted that on the public Twitter sphere. And basically, it did a nice move. That was right in here. You had the earnings held in tight. You could have been a buyer here versus 30. And then, this morning it hit a high of, what hit a high of? It hit a high of 32.23. And I did sell some above it, so now I could buy some back. But this has been something where I've been just letting it work for me. From 30 to 32 percentage-wise, figure it out. It's just one of the 8 to 12 longs that I've been trying to, basically massage. So do I still think you can get to 33? Yeah. But, this seems as if it's going to be a bit of a doji here. So it might mean it needs a little time for the 8-day to catch up. So that's why you don't want to be too big. So you sell some strength so you could sit. You could sit and you're not worried about it because you booked so many gains that, when it all of a sudden gets better again, you could buy it back. But if you sell it all, you might lose track of it. So what I also did with the banks today, I sold some calls on JP Morgan. I know it's risky to sell naked calls, but I don't think anyone's taken over JP Morgan. And I feel like it's extended enough that, if it happens to have one more blow off move, I could short the stock versus being just short the calls. So anyway, for JP Morgan, look how it took out this 2-year range here and then went above it again. So at this point, you can make it the chart look like this. This was the high today. The high today was what? 127.21. So I sold the 128s. Took in like 45 cents. And I know the Fed is on Wednesday. If they happen to be extra hawkish, maybe this gets another move. But for me, I'm like, I didn't short JP Morgan here or here. Up here, I'm like, you know what? I could sell the 128s for 45 cents and have a cushion. And, if it just goes sideways for a bit, you can, make a little bit of premium. So that's one of the, positions I'll manage. A lot of hedge funds out there, they have long, short books. So, for me, I could have some, majority longs on a net long, and I could also trade around some positions that I think are kind of extended as long as they're not the ones that could really hurt you. So anyway, I am still long Bank of America, and I just shorted the 128 calls. We'll see how it goes. If it if it starts going against me, what I might do is short the stock, considering definitely extended. But we'll see. This is best in breed. So if the S&P continues to break out, this will continue to probably grind up. But at this point, I would not be long it. There's no setup to be long. The time to have been long is right here after earnings. Remember, I talked about it. I said we could buy verse 117.99, which was this earnings pivot low. So what you like to do is, so one of my strategies, the day after earnings, you look at the candle and say, was this powerful? Is there a pro gap? Can I buy verse that low so it's calculated? And then can I add if it takes out the post earnings high? That's what I was talking about this morning. Tesla, LRCX, even Intel, some of these had these real big pro earnings gaps. So it's one thing to take options into earnings, trade them after earnings, and then it's another thing to then revisit it and then let another trade develop. So a lot of people wanted me to explain the Tesla scenario, so I'll explain it. So here's Tesla. Let's just go right to here. The day after earnings, okay? You knew nothing else. All you knew is after earnings that this was the 289.20 low. So you had a pretty sizable gap up that held that entire day. Remember, I was long the options. It was a great call spread, 275s, 290s. My net cost was like $1.70. I sold them for $15. That was fantastic. Haven't had an option play like that in a while. I lost a little bit on Snap, a little bit on Twitter, but little paper cuts compared to the winner this was. So anyway, coming in to work on Friday, even after, feeling so good about the options play, I said, okay, let me revisit the stock as if I didn't play it for earnings. Okay, it was down like $2. I'm like, let me buy a little bit verse 289.20 and then add if it gets above 304.93, because if it's going to continue and these shorts are going to continue to get pushed, it's got to get above this. So in order to get to 310 or 315 or 320, it has to get above this. So that's how you simplify it. So then on Friday that happened. Look at that big green bar. Wow. I remember, I bought it red. I added to it. I tweeted to RAA. I'm like, I'm long, Tesla versus the low of the morning, or you could do it versus the earnings, post earnings support pivot, which is right here, and took this out. I sold it around 314, thinking, hey, I just made another $10 on top of, the option play. I'm cool. Anyway, it wound up going all the way to 330. So sometimes it's better to trail it. Sometimes it's better to be out of the office with a stop. For me, I just took the trade, and then today it got above 330 and now made a high here of what is this now? This this is what is this? This is 340.84. Wow, that's a big 3-day move. And if you've watched some of my webinars, on the third day I'm typically a seller, not a buyer, even if it goes higher. But 340.84, 3. Okay, so this is Tesla. This moves very, very fast because of the short interest. So, this day was great that it didn't gap up, that you could have bought it down and then traded it through here, and then it happened again here. I actually made a little bit of money, which I don't tweet about because it was a cute trade, around 330, and I shorted it. People on the VTF saw, but it was only for a few bucks. So I, not trying to short here. But now for today, if it trades back below 330, maybe you have a little topping tail and then it needs to rest, which would be fine also. But this was your 3-day earnings setup. Great option play, great day of. You could have played it on on Thursday versus, or you could have waited even for the candle. You had your 2-pointer to reference, and boom. And look, same kind of situation happened in a different name in a totally different sector. It happened in LRCX. Same situation. Okay, look at this. Gap up, okay, above 251.95. Okay, you came in the next day saying, okay, look at this size of this gap. Okay, 251, that's a pro gap, very strong. It's got to get above 265.85 to get to 270. And then what did it do? Got above 265.85. So that was a nice little day trade. You could have bought it lower. It was down a little bit. And then boom, bought it here. And now day 3, you're a seller. Congratulations. But ultimately, you did not have to take it into earnings unless you did options, because we don't take stocks into earnings, or you traded it after when it took out these important pivots. And now look at it, day 3 up. That's why traders love earnings season, because if you have the right tactics and the situation happens, you could do very well. So those are those 2 earnings plays. Intel even. Let's just go Intel. Look at that, Intel. This was the chart that I posted prior. I did not play Intel. But some guys bought the $53 calls for 91 cents, saying, hey, if it gets into the gap, it should get to 57. So, 90-cent, premium. If it works, we're going to make $3-4. If it doesn't work, we lose 91 cents. So you're risking 90 cents to make 3 or 4, which is 300, 400%, whatever it is. That was a good play. And now this is Intel. It's a behemoth. It's not going to move as fast, but this also kind of held in there. Got a little bit above the post earnings high. It just didn't take off. Now, as far as Microsoft, why was I long Microsoft? Did I know that the Jedi deal was happening? No. But what I did know is that, just like other post-earning strategies, you had a big channel that was, so it wasn't overbought, and it was pretty solid. I know I was on Fox Business and I said, hey, maybe they could miss, and they didn't. So that was my thought. My thought didn't happen. So at post-earnings, I bought it. And then on Friday, I bought more because I was like, hey, this chart looks good. If we're going to break out, the market needs Microsoft. So I was buying it in the 140 area, and then all of a sudden going out to dinner with a bunch of couples, and I see the news. I'm like, yes. Sometimes, luck happens when opportunity meets preparation, and being in Microsoft ahead of today was good. Okay. So anyway, look how this had a pro earnings gap post earnings. This was Thursday. Then Amazon came out and missed, and just didn't care about Amazon. So not only could you bought a verse here, you could have bought it when it took out this. So I was my biggest long today coming in. So everyone's like, "Oh, Red Dog, you got so lucky." Yeah, sometimes you're in the right things and you get lucky. You could have went to Amazon, and then it probably would have been down $1 or $2, and then I would have to work, figure out how to trade around it. So now we'll see what happens here. Does this gap hold? And does it make it easy to sit? I'm in it. I did sell some strength and I added some back. This low here now is 143.55. So 143.55 is your post, cloud deal low if you're trying to see if this holds to digest above. So that's right here For me, I sold some above 145. I sold some above 144.50. So I did buy a little bit back. I just don't want to try and be too cute. But all in all, looks pretty good. Apple was my vehicle 2 weeks ago. I was long it pretty much the majority of the time, and then I got out of it late last week. And now this morning I tried a little cute short, only into strength with Apple, and I was able to make some money. Now I feel like I'm able to, if every time it makes a new high, you can, it goes a little bit above it, I fade a little bit now. So I'm on the other side of Apple right now, which I don't like to be, but I feel like, I was long it in size here. Okay, and then I did get out into this reversal. I missed this, but I was long its size on this day, added on this day, sold most on that day. Went back here. Remember my race? I was in it here. I added here. Great trade. Sold it into this red dog reversal. And now up here, away from all these moving averages, I feel like I could short some strength and just keep massaging. It's just a way to keep me long other things for now. I didn't short it here and here. I'm not rolling it up. I'm not going to stay short into earnings on Wednesday. I just feel like, I know it so well, and it's drifting, and I could just, not add to it after a pull-in, but I could trade around it. What was the high this morning now? 248.73. Where is it now? 248.28. Okay, so we'll see how it goes. I could see this being a doji. I love it still from the long side, but it's extended, so I'm using it as just a vehicle to trade around. Now, Google is one of my options that are working right now. Everyone's like, what are you going to do with your Google? I'm trying to figure that out myself. So I bought Google into this day prior to, actually, no, maybe on this day. I don't remember exactly. I did buy Google calls the day of Amazon. So just in case, I think I bought it on this day, and I bought the 1270s for $22. So now it's taken out this spot. It's still below this 1296. It hit a high of what already today? It hit a high of 1289. These options are like $40. So I've already almost had a double for buying it right in the base, not chasing it. So I might create a spread at the end of the day. I don't know. Some guys, what they're doing is when they bought it with me for $22 at 1270s, you could then sell the 1320s for 15. Okay, so 1270 to 1320, that's $50 of intrinsic money plus 15, that's 65, and it cost you 22. You're making, 45 points in profit above the 22. So not so bad. Plus, if you're wrong, you paid 22, you just took in a 15, you're risking $7 in premium just in case it misses and gets crushed, but then you could trade it after. For those with Amazon, some guys lost money like in options. I lost money in my call spread, but you could have made a hell of a lot more money post, earnings by buying it versus a level, in the hole. So if you're scared you might miss it because it rallies through, like if this all of a sudden has a solid report, this thing could be 1340, 1360 tomorrow. Okay, if misses and it opens down here, your options go worthless, but then you could at least buy the stock back more calculated if that's what you're looking to do. So some people did that with Amazon where, they were worried about missing this descending trend line breakout like me. So I was long the 1800s. I sold the 1850s. The way I purchased it, I was only risking $7. But then you could have been a buyer of the stock versus a level here and made 70 or 80 points versus losing 7 to 10 in control. I did not do that. I missed this bounce in Amazon, but now all of a sudden here it's set up again. We'll see. Now it's, here's your descending trend line. I reclaim this. Gets a little tight in here. I'll get back in sync with Amazon. It's been a little bit too tough for me lately just because it's lagging, it's not leading, and every time it's looked good, something's happened. Now with all the macro things out of the way, maybe there's a better trade there. We'll see. Facebook reports Wednesday. It's hanging in there. Feels like a lot of people think that the report's going to be good. Otherwise, they wouldn't have absorbed all the, Justice Department news, the this news, the that news, whatever it is. But anyway, it's, get rid of some of this noisy stuff here. This 190 is a spot, or this 191 is a spot. So, hey, if you really think it's going to crush it on Wednesday, maybe you buy the 190s now before it takes it out. So then if it does take it out prior, then you can create a call spread. I usually like to buy my first lot of options when the stock's quiet 2 weeks before earnings. So then if they do a post or pre-earnings run and then it goes, I could then do a call spread and it's pretty much funded by the buying it right. So anyway, that's that. I did buy back Snap, which was really good. Red dog reversal. What's a red dog reversal? You guys should friggin' know this already 10 different times. Okay, this was as high as 15. Got hit. This was the way it got hit after earnings. Then all of a sudden, boom, went below 1293. So if you sold it somewhere in here or you weren't in it, you know, prior to earnings because you don't like to be in it. I was in options and I lost money on my options. Well, I made more than enough money back on the stock. Why? Here, 2-day down move, went below 1293, put a low in 1271. You could have been a buyer at 1293, risking 12 cents, and now here you are back at 1450. It's a $1.50. It's a huge percentage move. Very calculated. And I even bought more when it took out this high here, which the VTF saw. Anyway, I sold some of them smaller, and so look at all these different types of tactics within a 15-minute video midday. I have like 20 of them that I used, all based on the day, the market, the whatever's happening, the time of year, and hopefully, you know, I'm not speaking another language to you. If I am, then you're not as technically based as most of the people in RAA, which is Red Laurel Access, because they see my morning call, they see my video, they read my note, they know my language. So, you know, to me or to them, what I'm just doing is confirming what they're thinking, so we have the confidence to execute together. If you are lacking good ideas and you are lacking a game plan, first, wake up earlier and get yourselves together, and B, get someone that you could trust that's going to put his best foot forward and try and guide you through. You know, and I'm not saying that I have to be that guy, but I am up every day 4:45. I put together an extensive note. I do 14 to 20 charts. I have active thoughts around all of them. If this, then that. If that, then this. And we try and connect the dots. And then when you're in a portfolio approach and the market's trending, you can make a lot of money with a nice active sequence. I wish you the best. I'll see you tomorrow for Red Laurel Access. I'll see you to recap. Bye-bye.